Picture this scenario. You've spent months developing the perfect trading strategy. Your back tests look incredible. Your win rate is solid. Your risk management is bulletproof on paper. You sit down at your computer, ready to execute flawlessly, and within 2 weeks, you've blown through half your account doing everything you swore you'd never do. Sound familiar? If you've been trading for any length of time, you've lived this nightmare. You know exactly what you should do, but when real money hits the line, something shifts. Your carefully planned approach crumbles under pressure. You start chasing losses, abandoning stop losses, and making emotional decisions that contradict every rule in your playbook. Here's what most traders don't understand. This isn't a knowledge problem. This isn't about finding better indicators or more sophisticated strategies. This is about discipline. And discipline in trading isn't what most people think it is. It's not about willpower or motivation or grinding harder. Discipline is a skill that can be learned, practiced, and mastered. But first, you need to understand why so many traders fail these critical tests. The brutal truth is that markets are designed to expose every weakness in your psychological armor. Every fear, every impulse, every shortcut your brain wants to take gets magnified when money is at stake. The market doesn't care about your bills, your emotions, or your desperate need for this trade to work out. It operates on cold logic while you're fighting an internal war between what you know and what you feel. Most traders approach discipline like it's a switch they can flip on demand. They think they can just decide to be disciplined and somehow their emotions will fall in line. That's not how human psychology works. Discipline under pressure requires preparation, systems, and a deep understanding of how your mind works when stress levels spike. Let's start with the first discipline test that destroys most trading accounts: the waiting test. This might sound simple, but it's where more traders fail than anywhere else. The market presents you with endless opportunities every single day. Price movements that look promising, breakouts that might lead somewhere, patterns that seem familiar. Your brain interprets this constant motion as opportunity, and opportunity creates urgency. But here's the reality that successful traders understand. Most of what happens in the market is noise. Most price movements are meaningless. Most patterns fail. Most opportunities are traps disguised as gifts. The discipline test isn't about recognizing good setups. It's about having the strength to ignore everything that isn't a great setup. Think about how this plays out in real time. You're watching your screens and you see a stock making a nice move. It's not quite your setup, but it's close enough. Your brain starts rationalizing. Maybe this time is different. Maybe you can adjust your rules just slightly. Maybe you'll miss out if you don't act now. That voice in your head gets louder and more persuasive as the stock continues moving without you. This is the exact moment where discipline gets tested. Do you stick to your predetermined criteria, or do you bend your rules because of fear and greed? Most traders bend. They tell themselves they're being flexible or adaptive, but what they're really doing is abandoning the very system that gave them an edge in the first place. The second major discipline test revolves around position sizing and risk management. You know the rules. Risk only a small percentage of your account per trade. Set your stop loss before you enter. Don't add to losing positions. These concepts are simple to understand, but incredibly difficult to execute when your money is on the line. Here's what happens to most traders. They take a position with proper size, but then the trade starts moving against them. Instead of taking the predetermined loss, they start negotiating with themselves. Maybe the stop is too tight. Maybe they should give it more room to breathe. Maybe they should average down because now they're getting an even better price. Each of these thoughts represents a discipline failure, not because the trader lacks intelligence or experience, but because they're fighting against millions of years of human evolution. Our brains are wired to avoid loss at all costs. Taking a loss feels like failure, even when it's part of a profitable long-term strategy. The third discipline test that separates winners from losers is emotional regulation during drawdowns. Every successful trader experiences losing streaks. It's not a matter of if, it's a matter of when. The question isn't whether you'll face adversity, but how you'll respond when everything seems to be going wrong. During drawdowns, your confidence erodes. You start questioning everything. Your strategy feels broken. Your edge feels imaginary. Other traders seem to be making money while you're bleeding capital. This is when most traders make their worst decisions. They abandon proven methods for shiny new systems. They increase position sizes to try to recover faster. They start forcing trades that don't meet their criteria. Winners understand that drawdowns are temporary tests of their commitment to their process. They know that emotional reactions during difficult periods are exactly what destroys long-term profitability. They've learned to separate their feelings from their actions, to maintain their discipline even when everything inside them is screaming to do something different. The fourth discipline test involves managing success. This might surprise you, but winning can be just as dangerous as losing for unprepared traders. Success breeds overconfidence. A few good trades in a row can make you feel invincible. You start taking bigger risks, ignoring warning signs, and believing that you've somehow figured out the market. This overconfidence leads to position sizes that are too large, stop losses that are too wide, and entry criteria that become increasingly loose. You stop doing the careful analysis that led to your success in the first place. You start believing that your recent wins were due to skill rather than a combination of skill, preparation, and favorable market conditions. The most successful traders treat wins and losses with equal emotional detachment. They understand that both are temporary outcomes in a longer game. They never let success convince them to abandon the discipline that created that success in the first place. So how do winners pass these discipline tests that destroy so many promising trading careers? The answer lies in understanding that discipline isn't about suppressing your emotions or pretending they don't exist. It's about creating systems that work even when your emotions are running wild. The first system that separates winners from losers is what I call preparation-based discipline. Winners don't rely on willpower in the heat of the moment. They make their decisions before emotions enter the picture. Before the market opens, they've already identified their setups, they've calculated their position sizes, they've predetermined their exit points for both wins and losses. When the moment comes to execute, they're not making emotional decisions under pressure. They're simply following a plan they created when their mind was clear and objective. This preparation goes beyond just marking levels on a chart. Winners rehearse scenarios mentally. They visualize how they'll respond when their stop loss gets hit. They imagine how they'll feel when a trade moves against them immediately after entry. They practice the physical act of closing positions at predetermined levels. This mental rehearsal builds neural pathways that make disciplined responses automatic rather than forced. The second system involves what I call environmental design. Winners understand that their trading environment directly impacts their decision-making ability. They remove temptations and distractions that lead to poor choices. This might mean using software that blocks access to social media during trading hours. It might mean turning off price alerts for stocks they're not actively trading. It could involve trading from a dedicated space that's free from interruptions and emotional triggers. Environmental design also includes removing the ability to make impulsive decisions. Winners often use position sizing calculators that prevent them from risking too much on any single trade. They set up their trading platforms with automatic stop losses that execute without requiring additional confirmation. They create friction between themselves and poor decisions while making good decisions as seamless as possible. The third system that winners employ is what I call accountability through measurement. They track everything, not just their profits and losses, but their adherence to their rules. They measure how often they wait for proper setups versus forcing trades. They record their emotional state during different market conditions. They analyze the correlation between their discipline levels and their profitability. This measurement creates awareness that most traders lack. When you're tracking your discipline failures in real time, it becomes much harder to rationalize poor decisions. You can't lie to yourself about why you're losing money when the data clearly shows the connection between rule breaking and account drawdowns. Winners also understand that discipline is a finite resource that gets depleted throughout the day. Just like physical energy, your ability to make disciplined decisions decreases as you face more choices and experience more stress. That's why successful traders often limit their daily trade count or only trade during specific hours when their discipline is at its peak. They also recognize the warning signs of discipline fatigue. Maybe they notice they start taking lower quality setups after lunch. Perhaps they realize they make their worst decisions on Fridays after a long week. This self-awareness allows them to adjust their approach before discipline failures occur. The fourth system involves building what I call disciplinary momentum. Winners understand that discipline is like a muscle that gets stronger with use. Each time you follow your rules despite emotional pressure, you make it easier to follow them the next time. Each time you take a proper loss according to your plan, you reinforce the neural pathways that support good decision-making. Remember this truth above all others. Trading success isn't determined by your ability to predict market movements or find perfect setups. It's determined by your ability to execute your plan consistently, regardless of what your emotions are screaming at you in the moment. The market will test your discipline every single day, but now you have the systems to pass those tests and join the small percentage of traders who actually succeed.